Welcome back to Income Trading 101. I'm creating this video, going to post it on April the 5th, 2021. Wanted to take a look at crude oil futures. This is one of the products I used to trade back in the day corporately, and I'm looking at jumping into trading this market again because I'm in and around this industry quite a bit. But there are many. When I say mini, I mean MINI. There's a mini crude oil futures that is actually has a smaller margin requirement and possibly a little bit more manageable risk for the the retail trader. So I figured I'd go ahead and make this video. Figured it'd be a little bit of fun. So I am going to right off the bat eliminate some of the volume. You can see we had high volume at the beginning of 2020 as the world was starting to feel the effects of the coronavirus pandemic. But if you look across the rest of this year and up to now even, volume really hasn't played much of a factor. So I'm going to go ahead and eliminate that. I also want to just kind of pull all the way back. Now what's interesting is that in this chart series, using this program, you're able to go back about 10 years. So what's missing is the run up in front month crude oil futures from 2008. I believe it was '08 when crude oil futures got all the way up to $140 per barrel. So what's also included, you see this one point where crude oil futures went negative. And it went negative for, it's just pure economics. There was, storage was full. This is a U.S.-based crude oil physical product that this futures contract is based on. So it has to have a home. And once it doesn't have a home, the guys that are drilling need to get it out of their pipeline system so that they can make room for new barrels. And that's why price went negative. So this is probably one of the only instruments that you'll see a negative pricing situation happen. That was always one of those things that was possible in economics, but I'd never seen it in my 20 years of being in the markets, and it happened in 2020 because, hey, if it was going to happen in any year, 2020 is probably that year, right? You can also get a better sense of where this commodity is priced right now relative to where it's been even across the last decade, right? So we'll come back to that and look to see if there's any, if we're hitting any support or resistance areas. But for now, I'm going to go ahead and get rid of that negative so we can go ahead, like I do with many of these other, most of my charts, I start looking at in roughly a year time frame. I don't want to pull that negative in because it just skews the entire chart. So we're going to just go ahead and close that out and analyze this data here. So we've had some upward trending markets, some sideways trending markets, went up again, and then it's currently down a bit. But we're just going to go ahead and analyze it and see, is crude oil a buy or a sell? So I'm going to start off with my moving averages. Switch them out to the 10, the 20, and the 60 as we always do on this channel, and start with the analysis here in just a moment. And I am using charts from TradingView. I like the number, even though I only use on these videos 3 different indicators. There are a number of indicators available. So if any of you have an interest in that, feel free to click the link that's in my description. And also, I wanted to make sure you guys know I create these videos every day. So if you haven't already subscribed to the channel, please do click the subscribe button. And I always appreciate comments and likes and whatnot as well. Let me know what you're thinking. So that all being said, let's dive into a little bit of crude oil. All right. So I'm going to expand this out so we get a better sense again where we are right now. There we go. I knew I was missing some data. So right now, at the daily standpoint, you can tell there's a bit of congestion meaning the moving averages are not in line. They're not in line as they normally would be, or the way I'd want to see. Let's take a look at some of the lower time frames and see if that changes at all. So at the lower time frames, they're still in congestion. You have the 10-day or the 10 period just moving above the 60 period, and it looks like the 20 is going to be right behind it, but it has not done that just yet. Let's go ahead and look at the 30-minute. 30-minute, so on a 30-minute chart, because of these three big green candlesticks, you have all three are in line. The 10 is above the 20, is above the 60, which is typically a sign of a bullish trend being created by definition. And just to drop this down a little bit more, the 15-minute, this actually gives me reason for pause, right? The 10-day, so they're all still in line. It looks like they are still bullish, but this 10-day, the slope of the 10-day has changed, and it appears to be slowing down. I would really want to see another green bar up to see or to feel like this was bullish. But otherwise, these, I saw a lot of congestion. We didn't look at the 4-hour. 4-hour is a little closer to the 1 day, and even in this scenario, I'm going to have to use the data, the actual calculations up in the upper left-hand corner. You see that the 10 is the same value as the 60 period, and the 20 is higher. That, by definition, or the way I define it, is a period of congestion as well. So lots of congestion, sort of a bit of a mixed feeling on the moving averages. And I like to look for, before I make a trade, I want to see some consistency in direction or in definition of the trend across time frames. And I also want to see consistency between more than one indicator. I only use 3 indicators on this show, but I do use more in real life, so it just depends. So let's kick this back out to the daily, take a look at the MACD. And I can already tell you that the MACD is going to be strong at the daily time frame, but it'll be interesting to see what shows up when you look at it otherwise. So we had this upward trend, nice little buy crossover back here in November, and it's just been, steadily up there. So whenever you have upward or trending markets, the MACD really doesn't, it seems less valuable because it doesn't give you as much oscillation as we'll see in a minute. But you did have this sell-off here. The problem right now that I have with this, after this crossover really that you saw on March 15th, is that only the MACD line has gone slightly negative. The signal line is still positive, and I want to see that drop into negative territory before I decide to short this commodity. So let's go ahead and take it down to a lower time frame and see what we see. So at the 1 hour, you see a lot more oscillation. We actually had a buy signal over here on April 1st, so just a few days ago, and it actually did cross into positive territory. This is a bullish indicator for sure. With this crossover of the MACD and the signal line into positive territory, that definitely looks a lot more bullish. Let's look at so when you look at this at the 30-minute level, you still have, so we'll say March 31st, I think on the 1 hour, it popped up at April 1st that you got a crossover and a little bit of oscillation here, and it's strongly into the bullish territory, but the buy signal actually would have been back here, and you would have gotten chopped up with these swings. Let's see what the 15-minute is showing, see if it's also bullish. So it's in bullish territory. The crossover also happened back on March 31st, so that would have been on Wednesday. And at the 15-minute level, we're actually seeing a crossover of the signal line and the MACD line. Because it hasn't gone negative, though, I'm going to put that as sort of, we'll just call it inconclusive at that point. So I'm going to go ahead and take this out to the 1 day. And I use Fibonacci analysis normally just to get a sense of any support and resistance levels. We're going to do a quick one just from this recent increase that we've seen since September. And you can see that November, but you can see that with this amount, the price did pull back beyond the 23.6 level, but I don't think Fibonacci is as relevant as just taking a look at some of the other sort of price levels that might be seen here. So things like looking at this price line, I'm going to try and pull this all the way back, and I really hate that negative data is there because it just sort of gets in the way of us truly analyzing price. But you can see this region that we're in right now with current price has been an area of resistance for a while. Look at this. It played resistance in July of 19. We saw it again as resistance in September of 19, January of 20 before the big pandemic. And then it managed to break through in March and stay above. But here we are seeing resistance here again. So honestly, I wouldn't be prone to buy crude oil futures right now, especially since at the lower time frames, it actually has sort of trailed off, which makes me think that this level of resistance is going to hold. So if we were to cross that like $62 frame, I would expect us to possibly test the 67.50, which was the most recent high. But again, this is a commodity that this thing can run, especially as summer months go. We've seen highs of, I think 75, 77 in there if we were to get beyond this 65 price range. But ultimately, I would expect to see a retesting of this $62 level. But if it does not pass that and stay above it, ideally you want this resistance to become support if it's going to be bullish. And I would ultimately let the market show me rather than pushing it. So that's it for today's video. Have a great day. Happy trading.